Good morning, everyone, and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX-listed companies. I'm Jane Morgan, and thank you for joining me today for our March investor webinar. Today, we'll be joined by 8 companies: Aura Energy, Tombola Gold, Magontec, Tiger Tasman Minerals, Titan Minerals, CuFe Limited, Austral Resources, and Jade Gas. So up first, we are joined by Aura Energy with the ticker code AEE, a company focused on the Tiris uranium project in Mauritania. To tell us more, today I am joined by Aura's acting CEO, Dr. Will Goodall. Good morning, Will. How are you?
Morning, Jane. Thanks for this morning.
Wonderful. Let me pull up your presentation and let you jump into it.
Good. Thank you, everyone. Thank you for coming along and listening to the Aura story. So, Aura Energy is a uranium development company in the process of transitioning from explorer to a producer with a low capex, low opex Tiris uranium project in Mauritania, Northwest Africa. So, next slide, please. So, Aura is listed on the ASX, it's code AEE, also listed on AIM. We underwent a strategic transformation at the end of last year with a focus on moving from explorer to producer with the Tiris uranium project, and are in the process of pushing that project forward as fast as we can. So it's definitely an exciting project, especially at the moment with things like uranium price doing what they've done today. In that strategic transformation, we've got a full new board, which came in December last year, and is much more focused on project development and the skills required around that. I'm sitting in the role of acting CEO, and I've been with the company for over 10 years doing all of the process development. We're currently we're well funded at the moment. We're currently in a trading halt pending a capital raising to support the work that we will go through in this presentation. So, next slide, please. So we're very excited with the board that we were able to put together to take the Tiris project forward. We've got, as a non-exec, Phil Mitchell, who's a very, very experienced mining executive, spent 35 years in Rio Tinto as CFO for the iron ore business, and then as head of business development and strategy at Rio. He brings a lot of experience in that process of taking resources all the way through to development, and is a real asset to the company. Also got Warren Mundine, who is a nuclear energy enthusiast, very well-known name through the Australian political landscape, and brings a very strong focus on community relations for the company. And Brian Dixon, who also has a lot of experience in taking resources back from that discovery right through to development. Complements Phil's skill set very, very well. And the board has been structured to complement our management team, which is much more focused on the technical side of things, engineering. I'm sitting in the role of acting CEO. I'm an engineer and have a lot of experience in that process development, project development side of things. So, next slide, please. For those of you who don't know much about the nuclear story, nuclear energy had a resurgence in the last year with decarbonisation. The requirement for baseload electricity is accelerating, and it's definitely something that we're seeing a lot of growth in going forward. The current geopolitical landscape in Europe has meant that a lot of countries, including Germany, who were looking at nuclear phase outs, are now starting to rethink that strategy and seeing that having baseload energy that's not reliant on the wind blowing or the sun shining is a critical aspect of where we're going to go into the future. Nuclear is obviously completely emission free, so it provides a very good way for us to get to that decarbonisation goal. There's been a lot of development in the nuclear sector over the last year, with China announcing 150 new reactors, a lot of reactors being relicensed. And on top of that, there's a supply shortage already in the uranium space. So there's going to be a real supply crunch coming up, and we think that Tiris is very well placed to be able to get through that supply crunch and to be into the cycle very early. And I'll take you through where that is. Next slide, please. So the Tiris project is located in northeast Mauritania. Mauritania is a small country in northwest Africa. There's only about 4 million people. It's got a very well-developed mining code, lots of experience in mining. Companies like Kinross is there with the large AWST gold operation. First Quantum Minerals has been there for a long time. And there's a lot of iron ore mining reasonably close to our operation. Project's out in the Sahara Desert. And has some very good characteristics. It's a low capex, low operating cost project, and I'll take you through why that is. We upgraded the resource last year. There's 56 million pounds in resource. We think there's a bit more there, and we'll be going out looking, doing more exploration this year. But that project on its that resource on its own supports a very, very nice project going forward. We're looking to upgrade that resource to support a larger operation this year. We've also just announced a vanadium resource associated with the uranium resource, which will serve to mean that we can produce a vanadium bauxite, which will further reduce the operating costs. Last year, we completed water drilling, finding water within the envelope of the project, and we have offtake agreements for the initial production, or a proportion of the initial production. So at this stage, we're on the process of moving into engineering, enhancing the resource with a view to move to a decision to proceed on mining by Q4 this year. The project's shovel ready, has all of its permits for mining, and is ready to proceed early into the uranium cycle. Next slide, please. As I said, the project is a low capex, low opex project. We've deliberately structured it that way. The capital cost is $74.8 million US. That price was updated last year. We had a DFS from 2019, so we thought it was relevant to update that price given the inflation that we've seen through COVID. C1 operating cost of $25.43. We think that will drop by $2 to $3 a pound when we add in the vanadium byproduct, all-in sustaining cost of $29.40. As I said, we've recently upgraded the resource by a small amount, and we're about to go out and do some more drilling this year to further upgrade that. Focus of that will be to upgrade more of the inferred resource to measured and indicated to support a larger project. So it's got good expansion potential, short time to development, and then we've got a good opportunity to expand it going forward. Next slide, please. As I said, the project itself is shallow, it's flat-lying, it's surfaced, it's free digging. You can see this trench here. That is the yellow that you can see on the trench walls is the uranium mineral carnotite. And that's why we can keep the project very lean and the costs very low. So there's no crushing or grinding. The mining fleet is one excavator and 4 trucks. It's very, very simple. We'll be targeting an initial project of producing 1 million pounds per annum of uranium with a view to expand that rapidly to 2 to 3 million pounds per annum. It generates good cash flow at current prices. It is viable at current prices, depending what you take current prices today. The uranium price is just at $59 a pound. So it's starting to look like a very, very good project at those prices. So thank you. Next slide. So just in summary on that, the project is there's no drill and blast, there's no crushing or grinding. The ore is shallow. We have a beneficiation process within the ore where we essentially reject 80% of the mass with only 10% of the uranium in that. So we take most of the uranium into only 20% of the mass into the process, which is why the capital and the operating costs are so low. That takes away lots of the energy intensity. It means it's very water efficient, and it means we can have a nice efficient project that's very easy to expand. So we don't have the significant costs around mining that most mining operations would have. We don't have the big power draws around crushing and grinding equipment. We don't have big requirements for open pits and cutbacks and lots of overburden. So it makes it a very easy plant to get into, process to get into, and to get up and running rapidly. Next slide, please. So as I said, one of our primary focuses this year will be to, or the first half of this year, will be get out and expand the resource, and the primary focus of that will be to expand more of the resource from inferred category to measured and indicated category, which will then support reserves for a larger operation. We'll be looking at constructing and commissioning a 1 million pound operation, and then being ready to rapidly expand that to 2 to 3 million pounds. And get that so we can get into production early in the cycle and move forward from there. We'll also look at regional exploration in the area to identify additional resources. Next slide. So this is just broadly the spread of the resources. I won't spend too much time on here, but the right-hand image shows that there's plenty of scope to expand those resources. Next slide, please. So in addition to the Tiris project, we have 2 other projects, the Hagen Vanadium project in central Sweden. This is a large vanadium project, which we completed a scoping study on in 2019. It's also got a sulfate of potash byproduct. That project was originally a uranium project. It's a massive uranium project, 800 million pounds of uranium in resource. We completed a scoping study in 2013 on that. The Swedish government subsequently banned uranium mining in 2018, but the current geopolitical climate shows that that's starting to look like it's winding back, or potential to wind back. So we're very excited about the possibilities of that project. We also have gold and base metal exploration opportunities in Mauritania, which we will be looking to develop further through a spin out. So next slide, thanks. So thank you very much for the time. It's as I said, we're very excited about the Tiris project. We're aiming to be one of the first producers in the current uranium cycle. New greenfield projects coming up. We think we've got a very good strategy to bring that into production, and we feel that it's a great opportunity to get into the uranium cycle. Thank you.
Will, thank you for the great presentation. I do note the question that has come through just on Sweden. You did just answer it, but I would like to ask it anyway. So do you think that it's likely that Sweden will reverse the uranium mining ban given the current geopolitical situation in Europe?
So 6 months ago, I said it would have been very unlikely, but the current situation has definitely changed. Energy security is a huge thing in Europe these days. We probably don't get so much of it here in Australia, but it's everyone's relying on Russian gas, and they don't want to be. So having the opportunity to have energy minerals in their backyard and generating in their backyard is definitely topical, and we see there's a real opportunity, especially if the government changes in September elections in Sweden. But even not, we see that there's a real opportunity that the legislation will be rolled back to the original mining legislation, which would allow uranium mining.
Wonderful. Thank you for that, Will. As always, it's great to have you on Broker Briefing, and a copy of today's presentation will be available online in the coming days. But thanks again.
Thank you.
So up next, we have a presentation from Tombola Gold with the ticker code TBA, a near-term Australian gold producer, fast-tracking to gold production and cash flow in 2022. To tell us more, I will hand you over to Managing Director, Byron Miles. Good morning, Byron.
Hi, Jane. How are you?
Great, thank you. Let me bring up your presentation. Oops, sorry, technical issues.
It's okay.
There you go.
Well, thanks everyone for taking the time out to listen to us about Tombola Gold. I'm Byron Miles, the new Managing Director. I've only been here a month, but it's been exciting to say the least. Our ASX code is TBA. Next slide. So just recently we raised nearly $3 million in the market. We have 834 million shares on issue. Our market cap at the moment is a touch over $30 million we had a pretty good day in the market yesterday after Peloton announced a nice research report. But one of the main components which should get everyone excited is that the week that we did this capital raise was quite difficult. It was obviously when Russia decided to invade Ukraine, but we were well oversubscribed. We did it at a very small discount. And for the first time, we've had institutional investors step into the board. Next slide. One of my first goals when I joined the company, as I said about a month ago, was to strengthen the board. With us looking to transform from a explorer into a producer, I brought Jeff Kidd on board with his 35 years experience in management and operations, working for the likes, being the CEO for the likes of Coalworks, and also being a founding director of Sedgman and Associates. Secondly, I brought Rod Watt on board, who seemed like a very good fit for the company. His experience in Ernest Henry, which is our northern neighbour, which is a tier 1 asset. He was there from very early stages and helped build out the PFS internally. But also we have assets in South Australia, and Rod was chief geologist for underground there for Olympic Dam for 3 years. So it was a great fit. I now believe we have a board which we can really start driving shareholder value. Next slide, please. This investment highlights, I guess, is one of the most important ones. I just touched on the new board and management. Number 2 here is we're working endlessly to get into production as quick as we can. We're looking to get into production in end of Q2, early Q3. Number 3 is pretty similar to number 2, but number 4, you would have seen the announcement this morning with some pretty exciting drill results. Up to 89 grams per tonne gold. We had 8 meters at 22 grams per tonne, 8 meters at 9 grams per tonne. All this is from near surface, and the bottom line is it goes along with what we're trying to do by unlock easy ounces so that we can get into production as cheap and efficiently as possible. Number 5 here, the scoping study. It needs to be mentioned that our scoping study, which was done mid last year, was done at $2,285 per ounce to give us a revenue of $160 million. The current gold price is $2,800 per ounce, so it doesn't take too much to extrapolate just how much upside that can give the company moving forward. Which sort of leads into number 6 for me. When I started with the company, I was looking at getting some conventional debt from one of the major banks here. But with the gold price rallying so hard, I've had and been inundated with inquiries with forward selling some of our gold. Obviously, the more money we have in the bank, the faster we can expand, not only in mining, but in exploration. And once again, try and drive shareholder value to get the share price where it deserves to be. Number 7, our expansion strategy that we have in place is pretty simple. We want to expand the resource, so we expand the life of mine, and we're taking steps right now to get that into production. Number 8, there's been various toll treating methods being considered in the past by the previous management. I'm currently reviewing all those toll treating methods. Ideally, we make more money at a higher revenue margin if we do produce all our gold on site. But as I said, that's being reviewed at present. With getting Rod on board, we further are looking to unlock what's happening up there, which I'll touch on a little bit later, but unlocking the geological potential of projects is a priority. And number 10, our core infrastructure, I guess, is one of the main reasons why it has allowed us to turn from an explorer into a producer at such a rapid rate. Number 11, once again, looking to unlock the geological potential that we have here, not only in Cloncurry, but in South Australia also. Next slide, please. So once again, touching on our scoping study, which was done last year, everything up to the mine site is progressing nicely. It can't be understated, the increase in gold price, just what that can do for our profitability. We're mining with conventional methods, and VAT processing is one of the simpler mining methods to extracting gold. And I look forward to updating the market further in the coming months. Next slide, please. So our project summary. Our main projects are obviously in Queensland and South Australia. Queensland's where our operating gold project is, or a project which we're bringing to operation. And South Australia also is near tier 1 assets. And I guess that was what really drew me to these projects. I believe the tenement package that we have is highly undervalued, and with work that we're doing on it now and what I've learned over the last month, I'm pretty excited to see what the future holds with unlocking some of the potential of some of these great tenements that we have. Next slide. So near-term operation. We're looking to get into production late Q2, early Q3. To give a broad overview of where the company is, 75% of our pregnation ponds have been built. Our first vat is currently being built, which is looking to be filled late next month. Our carbon columns have been delivered to site and we're progressing nicely. But if you see on the right, you can see a lot of the historical mines that we have across our tenement package in Cloncurry. Now, those 8 or 9 small mines that we have are in a very small radius. They've obviously come from somewhere, and we're taking steps to try and understand what happened at depth to allow those small deposits to pop up where they have. But yeah, keep an eye on this space in that regard. Our expansion plans look very simply, I want to double this resource. My performance options, myself and Rods, are to double the resource. We think it's obtainable. Obviously, if we double the resource, we double the life of the mine, we double the profitability, and from there, we generate further shareholder value. Next slide. Now, these also was what drew me to the company straight away. Compared to a small cap mining company or some of our peers who are doing exploration work on greenfields, I mean, there's been a lot of great money spent in the ground up here. And some of these intersections, you could nearly go as far to say as our company makers. And I believe when they did hit, the stock price did rally. And I look forward to doing some more exploration work with Rod to really unlock what exactly is going on up there. But there's been so much money spent in the ground and there's been a lot of great geological work done. I feel like we've got a really good head start in understanding what's going on. Next slide, please. As you can see, we've ticked off here a lot of the things that need to be done. We're also undertaking further steps to add value to our shareholders. Ken Collison's doing a report on our South Australian assets, which I'll touch on later. Our mining operations are to commence next month by filling up the first vat and hopefully producing a gold concentrate sometime end of Q2, early Q3. That being said, I've been up at site the last 3 days with the team, and we are looking at optimizing a way that we can get into production sooner and looking at various options. And not various options in the toll treating side of things, various options more so in producing our gold on our own site, because if we produce it on our own site, it's basically a third roughly compared to what we'd have to give up in a toll treating arrangement. Next slide. Yeah, well, it's our South Australian assets here is because we previous management made the decision to become a meaningful gold producer, which I think was the right decision, to have a market cap that we have and to be able to produce circa $20 million profit a year. It doesn't take too much to extrapolate that just how valuable this company could be. However, because of the great asset that we have in Cloncurry, I believe that Burra has been not shown as much love as I guess it should be. We're in a great jurisdiction with tier 1 assets around us. We've got a great tenement holding there with over 6,500 kilometres squared in our package. We've also got a $300,000 match-for-match grant, which we will be taking advantage of. As I mentioned, Ken Collison's updating a report, which will give us a better understanding of our tenement package down there. And we're looking to get the drill rigs down to site later this year. And thanks very much for hearing the short version of what's happening up there. However, there's a lot more to come.
Byron, thank you for the great presentation. We've had a question from a webinar attendee. So with the gold price now over $2,800 per ounce, Aussie dollars that is, we'd be updating the scoping studies with current pricing, and how will this change the profitability of the projects?
Well, the scoping study itself we will be updating the scoping study, but in simplistic terms, that $160 million can very simply, if gold prices hold where they are, can be over $200 million, which is pretty exciting and quite meaningful.
Wonderful, Byron. Well, thank you for joining us today. We look forward to hearing more from Tombola Gold.
Much appreciated. See you. Thanks very much, everyone.
So next up, we have a presentation from Magontec to tell us more about their magnesium alloys and cathode corrosion protection products. I will now hand you over to the Executive Chairman, Nick Andrews. Good morning, Nick.
Good morning.
Let me bring up your presentation for you.
Thank you. Well, good morning, ladies and gentlemen, and thank you for taking the time to listen to the Magontec story. Today, I'm going to provide a brief overview of our business, a review of the 2021 results, which were published on the 25th of February. We're a December year end, and a look at the immediate prospects for Magontec. So, next slide, please. Thank you. So Magontec is a manufacturing company, and we're largely focused on magnesium alloy products. We source pure magnesium metal and other raw materials, and we manufacture finished and intermediate products. We don't actually conduct any mining activities. Our largest business by revenue is the manufacture of magnesium alloys. We make primary mag alloys in China from pure magnesium and other alloying elements, and we recycle magnesium alloy scrap in Europe. In 2021, we made 20,000 tons of mag alloy ingots in 3 factories, which we sell into global markets. We also manufacture magnesium and electronic anodes. These anodes provide corrosion protection for still water tanks, and they extend the life of hot water tanks. Magnesium anodes are made by casting or extruding a mag alloy into an anode rod. Electronic anodes perform the same task, but are a more sophisticated and long-lasting product, and they comprise a titanium rod and a PCB board that intelligently manage an electric current to optimize corrosion protection. And we also make a variety of other specialist magnesium products for the aerospace, defense, and steel industries. The next slide, please. This chart shows our products in terms of volume and margin. At the bottom are the high volume metals businesses that supply product to die casters in the aerospace, defense, power tool, electronics, and the automotive industries. Most of the customers for these products are tier 1 automotive die casting companies, and the most ubiquitous application is the steering wheel. All steering wheels are made from magnesium alloy. Higher up the pyramid are the lower volume, higher margin anode businesses, where the customer base is focused on a small number of large global companies. Next slide, please. So manufacturers use magnesium because it's the lightest structural metal. It's 36% lighter than aluminium and 78% lighter than iron. When magnesium is alloyed with other metals, such as aluminium and rare earths, it acquires new properties, such as stress resistance and thermal conductivity, and it can be used for a wide variety of applications. The lightness and strength of magnesium alloy are an attractive property for many industries, but particularly the automotive industry, where weight quickly translates into energy consumption. Next slide, please. Another attractive aspect of magnesium alloy is its recyclability. Every ton of magnesium alloy sold to a die casting company returns scrap in the ratio of 40% to 70%. And we convert that scrap back into mag alloy ingots and sell that product back to our customers. Magontec is the largest magnesium recycling business in Europe, and probably the largest in the world, with 2 plants located in Germany and Romania, where we have an installed capacity of 25,000 tons. That's powered by electricity, and that electricity is 70% derived from renewable resources. The next slide, please. So moving on to the CCP anode industry, every steel tank in every hot water system requires an electronic or a magnesium anode, and 80% of the hot water systems produced are replacement units, so only 20% go to new homes. It's an industry where demand is very consistent. An emerging theme for this industry is the accelerating shift, particularly in wealthier countries, towards low emission home heating systems, such as heat pump devices. Most heat pump devices use an electronic anode, and Magontec is the world's leading manufacturer of this higher technology product. Next slide, please. So onto the financials, and this is what Magontec looks like in terms of its market profile. The company has a market cap of $30 million, net assets of $36 million, net debt of $6.9 million as at the 31st of December 2021. All of our debt is devoted to working capital for inventory and debtors. On the right, you can see the company is owned 29% by the Qinghai Salt Lake Magnesium Company, 27% by institutional shareholders, and 5% by management, and the rest by retail investors. The next slide, please. In 2021, the company earned gross profit of 19.2 million, EBITDA of 10.1 and EBIT of 7.3 million. The drivers of the strong earning boost you can see on those charts is a sharp rise in the anode volumes as we grew our market share in all markets, and a rise in the price of magnesium that delivered a much higher result for our European metals business, our recycling business. The next slide, please. So underlying operating cash flow generation, that's the cash that we actually keep, rose to 10.5 million. That pushed our net debt and our gearing ratios down very sharply. And as at the 31st of December, we were using 36.3 million of working capital across our businesses. And of that, 29.4 million is funded by Magontec equity. In other words, we use a lot of our own cash in our business and not a lot of debt. Next slide, please. So Magontec's full year result showed a revenue of 115 million, net profit of 5 million, and earnings per share of 6.5 cents, and reflect a number of very positive trends for Magontec in 2021. The next slide, please. In 2021, we commissioned a magnesium alloy cast house adjacent to a new magnesium smelter owned by the Qinghai Salt Lake Magnesium Company Limited. And they're a shareholder of ours, as you've seen, and they're our partner in Qinghai. At Qinghai, we have an opportunity to transform our business. Qinghai Magnesium's new electrolytic plant will produce 100,000 tons a year of low-emission magnesium. Magontec is contracted to take 56,000 tons, that's 56% of that product, for processing through our cast house. And you can see the cast house on the right-hand side of the screen. We've agreed an offtake price formula that shields us from price fluctuations, and we have the exclusive right to produce magnesium alloy at this facility. So Qinghai only produce pure magnesium. At full capacity and at current prices, Qinghai will add around $500 million of revenue to Magontec and will transform our current operation on this site from loss-making to a significant profit contributor. We think this will take 2 to 3 years to achieve full production, starting from the second half of this year, 2022. Next slide, please. So magnesium in China is produced using a pigeon process. And that's a coal-fired production method that has very high emissions, around 20 to 25 tons of CO2 for every ton of mag that it produces. The Qinghai facility, the smaller bar on the left, currently sources 90% of its energy from renewables and has set a new emissions benchmark for the global magnesium industry of around 7 tons of mag per ton, 7 tons of carbon for every ton of magnesium produced. So the next slide, please. So when Qinghai is up and running, we have an established global distribution network able to sell this unique product into every market. We have customers in Europe, North America, and Asia, and all of them are very keen to access low-carbon Qinghai magnesium to lower the embedded emissions in their own products in the die casting and other industries. And the next slide, please. So in 2021, Magontec's recorded a very strong financial result, and we look forward to new sources of growth as we bring the new Qinghai facility to market later this year. Magontec will be the greenest magnesium alloy manufacturer in the world at a time when all industries are required to pivot to a more environmentally sustainable process. We had a research report recently published on Magontec by AWST, and that's on our website. And if you're interested in more information, I certainly direct you to that document. And thank you all very much for your attention.
Thank you for that, Nick. That was a great presentation. And then certainly with that market cap, it seems that you're very cheap at the moment.
That's what I think.
So we've had a few questions come through. One in particular has come through from Twitter, a Twitter attendee. So what would be the highest growth market, and which market does the majority of revenue currently come from?
So the highest gross market is definitely the for magnesium alloys, and that's where the largest revenue will come from. When the Qinghai business gets into full production, we will be producing, as I said, around about 50 or 60,000 tons a year, and that will dwarf all of our other activities.
Well, Nick, thank you for joining us today. And I would encourage shareholders to head to the website to download that research note. But
Okay.
thanks again.
Thank you very much. Bye.
So next up, we have a presentation from Tiger Tasman Minerals, an upcoming IPO, which is an Australian base and battery metals explorer, rather. To tell us more, I will now hand you over to Managing Director, Noor Cruikshanks. Good afternoon, Noor.
Thanks very much, Jane, and thank you everyone for attending today. I'm very excited. First slide, please.
Let me just bring it up.
No problems. Excellent. So we're an emerging Australian base metals and battery minerals explorer and developer, and that pictured on the slide is one of our projects. It's the AEDT meteor crater, which is roughly around about 1.6 billion years old. So we've got the northeast corner of that crater as one of our projects. Next slide, thank you. So our disclaimer, our disclaimer. So we are approaching IPO. So we're not a listed company as yet, and a bit more detail on that further on. So why are we different in terms of other exploration development companies? We believe the premier jurisdictions of our projects. We have 5 projects. They're in Paterson Province, Fraser Range, and AEDT Basin. And for those of you familiar with the landscape, they're probably some of the best provinces to be in, and certainly Australia is one of them. We have an experienced board and team, plenty of ASX experience and battery materials and base metals experience. We're pursuing green energy, electrification, and decarbonisation materials. Obviously, there's a significant demand, particularly given the current scenario with the geopolitics happening in Europe, and that's accelerating. So the demand is there, and we're certainly going to try and assist in meeting those requirements. Our priority exploration targets, there's a range of elements that we're chasing: copper, nickel, manganese, amongst others, and DMM, and a little bit more about that in a moment. We have one target or prospect, if you say, high-grade manganese, which is close to infrastructure. It's undrilled, untested, and we're very excited about that. The other, I guess, flagship opportunity from a target perspective is potential near-term cash flow from an operating asset opportunity in Queensland. And we'll talk a little bit more about that in detail, but it's taking an approach of a low carbon footprint and a potential electric mine of the future approach. We are an ESG-centric business, so unlike, I guess, others, we have taken ESG and embraced it, and it's part of our DNA going forward. So we've got aspirations around carbon neutral status, joining the UN Global Compact, and integrating ESG thinking in our mine of the future designs. And perhaps the most important aspect is risk mitigation. We believe the quality of our Australian portfolio of projects, the location, the multi-commodity exposure, and the impact of exploration upside, together with near-term development, is compelling for most investors. Next slide, thank you. We have an experienced board of directors. There's over 80 years of experience on the board. Richard Beasley is a mining engineer, plenty of experience with Sandfire Resources, Peak Resources, and currently with Troy Resources. So very well experienced in base metals as well as battery materials. Dennis Trellin is an economist, plenty of ASX experience with Ashburton Minerals, Platypus Minerals, and he was instrumental in terms of the Libitico transaction. So plenty of corporate experience there. Myself, I've spent metallurgist by background, and spent a number of years at BHP and BlueScope, and of recent times in mining services, so project engineering, construction, and design. So combined, we have a excellent relationship. We've known each other for a number of years, work very well as a team, and complement our skill sets and experience. Next slide, thanks. Sustainable development is our core belief. So we are looking through the lens in terms of all of our activities from exploration through to development, and also acquiring and divesting assets, we are looking at it from an ESG lens. So we're certainly embracing the UN Sustainable Development Goals, 17 there. We have a clearly defined approach towards ESG in our business, and our objectives really is to try and capture carbon neutrality as a goal within the first 12 to 24 months. As indicated, we're looking at joining the UN Global Compact. That's approximately 15,000 businesses globally around the world. Not too many exploration companies certainly are members currently. We are going to develop an ESG strategy in the first 12 months of post-IPO and audit our performance against our peers and what is best performance around the globe. Next slide, thank you. So battery market growth is driving global metal demand. And I won't dwell too much on this because I think people have certainly been exposed to what's happening in this space. But by 2050, it's predicted that 95% of vehicles are going to be renewable energy based, whether it's electric or hydrogen based. If we look at what's happening in the battery space, raw materials specifically, your typical phone has got 5 to 7 grams of copper, for example. All the way through to a hybrid vehicle, which is 40 to 80 kilograms, depending on the design. And for a charging station, which there's going to be a lot more of them going forward, you're looking at greater than 600 kilograms per station. So significant growth and demand is predicted. The battery market's currently growing at about 15% per annum and has been and looks to accelerate going forward. Next slide, thanks. So as I mentioned to you, we've got a portfolio of 5 quality projects that we believe has high impact upside. And in fact, out of the 5, our thinking is that there's 3 company makers out of the 5 projects. So Copper Canyon is a flagship exploration project based in the Paterson province. We'll talk a bit more detail in a moment. The Iron Skarn project is a flagship pre-development. So even though we're exploration, we're also a development opportunity as well. And there's some exciting news around that pre-development opportunity I'll talk about in a moment. Mount Minnie, we're chasing a high-grade manganese, and there's been a little bit of work there that's got us excited. Fraser Range project, that's a pure exploration play, as well as Crater project, which you saw the satellite image earlier on the piece. Next slide, thanks. So Paterson province. Prior to Rio Tinto's Winu discovery in 2018, it probably hasn't really been heard of to any large extent, but Winu certainly put it on the map. And what a major tier 1 discovery that was, 500 million tonnes, grading at significant copper and gold and silver. A couple of challenges in that space, particularly with cover in that part of the world. But it's now well regarded as elephant country, and it's dominated by a range of majors operating in that space. Now, one of our projects, the Copper Canyon project, we've been able to secure 502 square kilometres in what we believe to be quite prospective ground. Next slide, thank you. So 502 square Ks, we're centrally located, it's under application, but a couple of points there around access. In the exploration game, gaining access to your tenements is certainly a significant cost driver, and being next to a well-developed Telfer highway certainly gives us advantages in terms of getting access to the tenements to do exploration cost effectively. Neurology I'll touch on in a moment, but we're certainly in the Paterson province next to some very significant players in exploration and development. So there's a range of existing tier 1 mines and resources, and certainly the active exploration environment is gaining in intensity going forward. What's got us excited around Copper Canyon is the 2 gravity images on this slide. The bottom slide depicts the gravity image for the Winu deposit, which was discovered by Rio Tinto. And the top gravity image shows the Copper Canyon project that Tiger Tasman has secured. And there's certainly some exciting structures there. So the gravity edge on structural positions on both the western and eastern edges of our tenements suggests there's two significant anomalies there that you definitely want to learn more about. So that we're excited, and certainly the potential for a significant mineralisation and potential resource there is very exciting from our perspective. And once again, being next to the Telfer Highway, we have great access to our tenement, and cost-effective exploration is what we're going to be targeting. Next slide, thank you. As I mentioned, it's our neighbours are very interesting and very busy right now. So if you look at the blue outline of where our tenements are in the centre of that picture, that's the Copper Canyon project. We are bordered by some very well respected producers and explorers. So on three sides we have Rio Tinto or Rio Tinto joint ventures. We're very close to Greatland Gold, Rumble, and a whole range of other players here like Newcrest and Cyprium. And what's interesting about this province is that there's been some significant corporate transactions in terms of deals and farming arrangements and significant numbers. So we're very excited about the prospect of doing some geophysics and early stage exploration there. We believe that it's a high potential opportunity in terms of discovery, and we've got a well mapped out plan going forward. Next slide, thank you. So I mentioned to you about a near-term opportunity for development, and that revolves around dense medium magnetite. Now, not very familiar amongst most people is DMM. So it's an industrial mineral, and it's a concentrated form of magnetite. And what it's used for is to wash coal to help reduce the carbon footprint for end customers. So if you're a power station burning thermal coal, or a steelmaker using metallurgical coal, you want to have washed coal in order to reduce your own carbon emissions when you consume the coal. And that's linked back to the COP26 agenda, which has been signed on by a range of different utilities and steelmaking companies. And obviously, with ESG taking more prominence in business today, they've got their own internal targets. So it's in great demand. Our project is located in Queensland. That market, as we understand it, is 200,000 tonnes plus per annum, and it's 100% imported. So our opportunity with the Iron Skarn project, which is what we've secured, we believe we have the potential to disrupt this market by providing local supply at the doorstep of the coal miners, using a low operating cost and low carbon footprint model based on a mine of the future concept. And we're very excited about that prospect. Next slide, thank you. So a little bit about the Iron Skarn project. It's within 40 kilometres of Townsville, which puts it in a great position in terms of infrastructure, ports, railways, power, if required. There's been significant IP generated on that project. So it was previously held by Strategic Minerals PLC, which was an AIM-listed company. They spent in excess of 5 million Australian dollars in generating IP on that. So it's very well, I guess, explored and researched to an extent where they're able to declare a JORC resource, JORC 2012 mineral resource for Iron Glen, and that was done by TerraSearch. In terms of the Iron Glen deposit, there's been just under 6,000 metres of RC and DDH drilling undertaken on it. It's very well researched. The wireframes in that bottom diagram shows you just the amount of drilling that's been done around that resource. But what's got us excited is the internal scoping study which has been undertaken on the Iron Glen resource, using quite a simple circuit in terms of processing, utilising green energy, whether that's electric and battery or hydrogen and battery, and looking at a relatively modest cost for development, suggests that there's a very attractive free cash flow and pre-tax NPV arising from it. So our next step, obviously, is post-IPO is to complete due diligence on the scoping study assumptions. And we believe that we can move to a DFS very quickly from that point. There's been a number of other interested parties wanting to talk to us about the project, so we'll be engaging in conversations going forward once we've done those preliminary steps. Next slide, thanks. So quite apart from a development opportunity, Iron Scarn offers us a significant exploration opportunity as well, and that's the Lead Belly prospect. And that the gravity image that you can see there down the bottom right-hand corner, you can see the Iron Glen resource, and above it is what we call the Lead Belly prospect. It's untested magnetic anomaly. There's been 3 drill holes sunk into it. We found some very interesting results. We believe it's highly prospective, certainly from a resource perspective, and potentially to help us enlarge the resource measure for the overall project. So there's a significant upside from an exploration perspective, we believe, through Lead Belly. Next slide, thank you. So Mount Minnie, I mentioned about high-grade manganese. This tenure is about 30 square kilometres. It's just outside of Onslow, about 120 k's. Running past our tenement is the Northwest Coastal Highway, so great accessibility. It was previously held by Shaw River, an ASX-listed exploration company. They did some preliminary exploration surface sampling. They identified over 41.1% manganese in some of these samples. We believe it's highly prospective for manganese mineralisation. It's certainly got some dolomite geology and structure which mimics that of Woody Woody. Certainly we're looking at in the initial post-IPO period to do a bit more detailed work around surface sampling. So next slide, thank you. The Fraser Range project, quite exciting. We've got 124 square kilometres of highly prospective tenement there next to Nova Nickel, which is approximately 60 kilometres away from our tenements. There's been very limited base metals and gold exploration undertaken to date. So certainly the scope there is significant. There's been a number of shear zones and fault lines that are running through our tenement, and Mindex suggests there's significant nickel, copper and zinc anomalies in that region. So we're quite excited about pursuing that exploration going forward. Next slide, thanks. The Crater project, so that was quite the distinct satellite picture that was on the cover of our presentation. As you can see, our tenement is there on the northeast quadrant of the crater itself. The ground was, underexplored. Certainly there hasn't been too much work done. It's 40 square k's. We're relatively close to Rumble Resources there and their Erahidi joint venture. Major faults and crater structures are within our tenements, and post-IPO we're looking at detailed aeromagnetics and soil sampling to discover it. But there's certainly been indications there, as you can see. There's gold, iron ore, copper, lead, zinc, and manganese in relative close proximity to our tenements. So once again, quite an exciting opportunity. Next slide, thank you. So as I indicated earlier on, we're approaching IPO. This is our indicative capital structure and use of funds. We're looking to raise between 5.1 up to a maximum of 8 million. In terms of holders, the board is certainly quite prominent there. We have great confidence in these projects, and we're certainly committed in delivering value for all shareholders, including ourselves. So we've certainly got significant interest there. Next slide, thanks. So indicative timetable and exploration spend. So I might touch on the exploration spend. Copper Canyon and Iron Scarn are the 2 flagship projects that we'll be pursuing in earnest post-IPO. We've got a well-developed exploration strategy going forward. The Fraser Range, the Mount Minnie and the Crater projects are certainly in ranking. So Fraser Range with the surface sampling of 41.1% manganese is of great interest to us. So we're going to spend a bit more time and effort in terms of exploring that. Mount Minnie and Crater is probably more geophysics and geochemical exploration in the initial stages, with a view to addressing those in earnest in year 2. In terms of indicative timetable, we're looking at lodging our prospectus in early April, and hopefully closing that off by the end of April and listing in around early or mid-May. So that's a timeline. Next slide, thanks. So why do we believe the opportunity is significant? So when we compare ourselves to our peers, a number of distinctions come out. Number one is Tiger Tasman Minerals is offering 5 quality projects. So we're not a single project exploration development company. In terms of the opportunity there, so we're not only exploration, but we're also development. So a pre-development opportunity exists that we want to pursue, and potentially that will generate near-term cash flows. In terms of the primary metals, we're not a single commodity explorer, we're a multi-commodity explorer. So when you combine that from a portfolio perspective, we're de-risked significantly. And when we look at our forecast market cap and EV, it compares very well to our peers, and we believe it's compelling. Next slide, thank you. So if you need any further information, please feel free to contact us. There's some contact details there. And that's really the end of it, Jane. Thank you.
No, thank you for the great presentation. We've run slightly over time, but I will jump into one quick question. So how quickly could Iron Skarn get into production? And based on your internal estimates, how much material could it produce and for what kind of life of mine?
Yeah, certainly. So look, the initial scoping study was based around a life of mine around about 7 to 8 years. We're looking at a high quality product, so the volumes are not significant. We're predicting in the scoping study approximately 55 to 60,000 tonnes per annum of dense medium magnetite. And time frame, look, we are aiming for something in the order of 24 to 36 months.
Wonderful. Thank you for joining us today, Noor. And a copy of today's recording will be available online in the coming days.
Thanks very much, Jane.
The next presentation is from Titan Minerals with the ticker code TTM. To tell us more about their copper and gold exploration projects in Ecuador, I will now hand you over to the Executive Director, Matthew Carr. Hello, Matthew. How are you?
Hey, Jane. How are you?
Great. Let me bring up your presentation.
No worries. Thanks for having me.
Off you go.
Excellent. Thank you. Look, the projects that we're going to speak about today, we've got 4 projects that are based in Ecuador. If I take a step back, we identified Ecuador as a place of interest off the back of some exploration success that SolGold had back in 2017, 2018. We identified these assets at PDAC in 2018 and targeted the group that owned them and completed a takeover in early 2020. The assets that we've got sitting in southern Ecuador, they're about 50 kilometres from the north of the Peruvian border. The interesting thing about this part of the world was, for the most part of the last 30 years, much of this area had been locked out through a border dispute. So largely, not a lot of exploration or prospecting had taken place. Obviously, since then, between the two countries, things have been sorted out. In the last sort of 5 to 10 years, mining in Ecuador has certainly become something that is supported by the government. And we've managed to secure 4 projects, of which I'll really focus on 2 today. So if you look in that small yellow box there, you can see the 4 projects. We've got the Dynasty Gold Project, Linderos, Copper Duke, and Jerusalem. The focus for the first half of this year, particularly, will be Dynasty and Linderos. So if you want to go to the next slide. Yep, just here's perfect. Look, so from from a corporate point of view, market cap of about 140 mil. We've got currently, as of December 31, we've got 17.75 mil US in cash, cash receivables and investments that we can monetize. So we're well capitalized to really drive the exploration through 2022 and really unearth what will be a potential new discovery and certainly advancing Dynasty to a multi-million ounce type of deposit. Next slide, please. Look, this gives some validation to why Ecuador's so popular at the moment. You've certainly had a strong move by some of the majors globally. So certainly SolGold caught the attention of the market. Newcrest and BHP both position themselves on their register. We've seen the emergence of FMG and Hancock in country. Newcrest have got a strong presence, and you've seen First Quantum and others try and position in this part of the world. The interesting thing about Ecuador is it's all the concessions that have been granted are it at the moment. So from a real estate point of view, awfully difficult for anyone else to get in and pick up new ground. They're certainly looking at everyone who has ground and what you're sitting on. So, from our perspective, we think we're these type of assets you don't see in an Australian junior. So it's rare that a junior has assets that has the scale and potential that we've got. And with that, it's starting to capture the attention of some of the bigger players in the market. Next slide, please. Look, there's been a few phases in development with this company. Phase one was completing the transaction, which happened in March 2020. Phase two was, once we got in there and got hold of the projects, it was start to properly understand what we've got, where they're at, and what needs to be done. We largely completed that by August 2021. Off the back of that, we've been able to wrap around the project some excellent people within the industry. So Mike Skeed was with GT Gold, which got taken out by Newmont last year. He was going to retire and went down and visited the site, both Dynasty, Linderos and Copper Duke. He came away from not wanting to retire, but moving him and his wife down into the country because he felt that there was a new discovery, a huge new discovery, one of the best he's seen in his career at Linderos, and he thought Dynasty could be something substantial. So he's the VP of Expiration. A similar story with Pablo Morali. Pablo was with Cerro Casale in Chile, which is a 20 million ounce copper gold deposit, and he again went up, did his DD, literally walked the ground for over 4 weeks, spent some time in country, and he has moved him and his family up because of the opportunity that he sees with this particular group of assets. Next slide, please. So here you can see, the 4 projects we've got. Today, I will really narrow the focus on 2 in particular because, they're going to be the focus over the next 6 to 12 months. And it's where we see a huge amount of value coming for our shareholders. Next slide. This is just a quick snapshot of what's taken place. So, as I said, the first 2 phases have been complete. That included the sale of one of the non-core assets for 15 mil US. And obviously, we've had some key hires with Peter Cook, Westgold chairman, who's come on, Mike Skeed, who I mentioned before, and Barry Bourne. All of these guys are the type of industry people that don't just join junior boards just for a bit of remuneration and the fun of it. They think we're on the cusp of significant global discovery. They all wanted to be involved because of the projects and the scale. So, I think it's for them to put their names to the projects is a huge validation. Next slide. This is a snapshot of the phase 2. We've completed that, as I said, August 2021. So we're now moving into the geology phase, and get to the next slide. All right, so this is Dynasty. This gives a bit of a snapshot of what we're talking about. So it's a pretty basic image, but what you've got is you've got a 9-kilometre corridor that's running from the I guess the west through to the east. You have on one side you've got Serra Verde, and on the other side you've got Papial. So historically there was a 43101 resource done on this thing. The group had come in. There's 2 main roads that run from either side. So they came in and drilled the pinkish coloured magenta areas where the outcropping veins. So they drilled about 2 kilometres in either side and down to about 150 metres. So the current 2.1 million ounces or 14.4 million tonnes at 4.5 grams sits in the top 150 metres. So the ability to really drive the scale and show the limits of this thing is still, there's a significant upside. Drilling done to date, now there was 25,000 metres done by the former group. We've now done another 20,000 metres. So this, we're coming close to 50,000 metres of drilling that's being done in these areas. So it's given us a high degree of confidence that what we've seen is shaping up to be bigger and better than what was previously understood about this resource. And we're still yet to even test the limits of it. So the first pass of drilling really just went back in and retested on different orientations some of the previous drilling that had taken place by the former company that had the assets. What we've seen is the mineralisation, rather than run to 150, is showing extent down to 450 metres. And there's been a small step out in some of the areas, and the mineralisation is carrying through the structure. So that structure is running all the way through. We think there's going to be, probably going to be multiple discoveries here. We're seeing high-grade vein clusters, and we're seeing halos of gold that are sitting in between and around some of these veins of some broad intersections. So, from where we're going to see the size and scale, we're going to see it at depth, we're going to see it along strike, we're going to see and we're going to see new discovery within this group of concessions. So the 9 kilometres, to give you an example, is 1.5 times the size of the Kalgoorlie super pit, for those that are familiar with the super pit. We think realistically, this particular group of concessions will go to, from being 14.4 million tonne, we think it's probably 50 or 60 million tonne. We think the grade probably drops down to sort of around 3 grams per tonne. At the moment, it's 4.5, but it'll be a huge, huge opportunity for us to show the market size and scale. So, we think it's a multi-million ounce deposit on the downside, and certainly something that's going to be much bigger. It's certainly attracted a lot of attention, and now we're putting the technical capability behind it with some of the individuals that we've got involved. Next slide. These are just to give you some background on the areas that have been drilled to date. So Serra Verde, Iguana, and Papial. Largely, most of the concessions are undrilled. So the limits of the system are not defined. We're certainly seeing continuation of gold at depth and certainly along strike, as I said. Next slide. Some of the drilling that recently had been done, I think we recently put out 102 metres at 1.48 grams per tonne. We've got gold running from surface down to 300 to 450 metres in different areas. You can see it's really coming together. What's interesting about this system is it's a multi-event system. So while it is an epithermal gold system, we have a cluster of porphyries that sit, I guess, within these concessions. We have recently tested the Calaman porphyry that sits at Dynasty. We're waiting on some results, but based on the historical drilling, it looks like a gold-rich porphyry. It's sitting under, slightly under the epithermal system. So this thing could be big, real big. Next slide. There was a history of mining done here. So they actually did 3 years of small-scale mining. We got a really good look at the data. We did a reconciliation of it. What it showed is that they originally opened up in the first 3 veins. There ended up being another 8 on top of that in the one pit. The pit ended up going down to 80, 90 metres. The grade was off about 15%. The tonnage was up significantly and ended up being about 40% more gold. So we think that's indicative of what we're going to see across the board. And that's just in this particular area of Cerro Verde. Next slide. Look, over the next 6 months, Mike and his team are identifying next steps with the drilling, how we're going to demonstrate the size and scale. We think at the moment, we can show the market that this thing is going through 2022. This thing's going to be a multi-million ounce deposit with a hell of a lot of upside. Some of the non-core assets we'll continue to look at divestment or JV options, but 2 priority projects at the moment are Dynasty and Linderos. Next slide. So Linderos is a really interesting one. Mike skied when he walked the ground and looked at the data, was super bullish on it. He thought it was a real wild card, something that had massive potential to be a new discovery of a rich copper gold system. This was a big part of why he joined the company. He said he's worked in all different projects in Africa, Canada, all around the world, and he actually hasn't seen an early stage project that looks like this one from his perspective. So he's obviously pretty excited about getting to site and looking at the first pass of the drilling. We're probably not that far away. I think we're within the next sort of 6 weeks we'll probably start the first pass of drilling here. There's 2 parts to it. There's the Meseta Gold Camp, which is a high sulfidation epithermal system on the edge of a copper copper ridge, which is a outcropping porphyry. Next slide. What we're looking at with the Meseta Gold Camp is that there had been a history of some holes. They had done a little bit of testing of it. It had come up with some pretty good results. It had 28 metres at 2.5, 8.8 at 4.7. Since then, Mike and his team have gone in, mapped it. We've done the soils. We've done the aeromagnetic work. A hell of a lot of work and planning's gone into on the next steps on when we're going to go back and drilling. Some of the older trenching results have shown 21 metres at 18.5 grams, 20 at 14. So really strong mineralisation, and it gives a level of confidence to go in and test this gold prospect, which is part of Linderos. Next slide. Copper Ridge is where Mike is super excited about. You've got you've got some stock work, channel sampling that had been done from surface, and the results are really encouraging. He describes it as a bullseye target. It's about 1 kilometre diameter. He says it's got all the geochemical gateway minerals that you want to see: zinc, lead, moly, and it's a proper bullseye target. So he knows where he wants to drill. and why. And we're pretty excited about testing this out. Next slide. And just to finish, we've got two other projects, Copper Duke and Jerusalem. Copper Duke is a pretty exciting prospect, but it's still early. We still need to do a lot of the non-invasive technical work before we're ready to go for a proper drilling campaign. We've twinned an old UN hole and tested some geology that we're waiting on some results, but this will fall into the second half of the year. And just in closing on these particular assets, as I said, 3 phases of the company. Phase 1 was complete the acquisition. Phase 2 was the re-engagement with the community, CSR, government, surface rights, preparing the team and building the team. We're into phase 3, which is the most exciting phase. And I guess to use an old saying, we've pushed the cart to the top of the hill, and now it's time to roll down the other side and start collecting the gold coins. And this group of assets, it gives a size and scale that really, really capture the attention of not only the Australian market but the global market with the new discovery potential. So if you're a speculator, if you're a betting person, what's the play? The play is you have Dynasty, which is, we will demonstrate it is a multi-million ounce gold opportunity, and you've got a free hit at something that could be the next Solaris Sol Gold at Linderos. So look, I think we're worth multiples of where we're trading at the moment, and I think in the fullness of time, the market will recognise that. That's it.
Thank you for that, Matt. Unfortunately, we have gone over today,
Yep.
but there has been a few questions that have come through. So I'd encourage webinar attendees to reach out via the contact details on the bottom of the ASX releases. But again, Matt, thanks for your time.
Excellent. No worries. Thank you.
So the next presentation is from emerging copper and iron ore company, CuFe, with the ticker code CUF. To tell us more, I will now hand you over to Executive Director, Mark Hancock. Good afternoon, Mark.
Yeah, thanks very much, Jane. Yeah, appreciate the chance to join again. I think it's probably been about 6 months or so since our last update, and we were under the moniker of FE Limited back then, but we've picked up some copper assets in the intervening period. So we changed that over to CuFe to reflect that, and we've also managed to get our first shipments out and survived another up and down roller coaster in the iron ore market. So it's been a busy period. I'd like to step everyone through it all.
Wonderful. I look forward to hearing. I'll bring up your presentation now.
Thank you. Yeah, thanks. Just jump forward a couple to the. Yeah, thanks. Yeah, look, I'll talk to these in more detail as we go through. Sort of started already, I guess, but just highlighting that our two key planks are really having exposure to high grade, premium quality iron ore, which we direct ship and sell currently into the currently a buoyant market, and emerging exposure into a mature copper gold play in the Northern Territory. So as I say, I'll touch on each of those a little further in subsequent slides. Thanks. Company chaired by Tony Sage, sort of mining veteran, done lots of deals, got lots of access to capital and contacts, and then most of the rest of our management team, including myself, ex-Atlas Iron guys, formed part of the executive management there for many years. So we're quite familiar with getting projects up and running, and got a lot of contacts in the steel industry and in the trading environment that we've leveraged off to get ourselves started with this company. I've been involved now for a couple of years, and we've transitioned from basically a passive explorer, in non-operating joint ventures or having royalties to now running mines and seeing the path to bring several others into production going forward. This just shows quickly the location of the projects. I'll start briefly with the copper ones, given we put the CU first. So you can see there Tennant Creek and also our Bryah Basin projects. Again, I'll talk to those on the next slide. So in Tennant Creek, we've acquired a mature package of of ground. It had been owned up until 2020 by Evolution. They'd taken it as part of the breakup of their joint venture in that area with Jemison Resources, and had chosen this as the ground that they wanted to keep when that joint venture was ultimately distributed. The ground's been mined historically for many years, probably not since about the mid-1990s, so going back quite some time. But there's still remaining reserves there, resources I should say, of 6.6 million tonnes at 1.8% copper, and 31,000 tonnes of the contained copper there, which there's a total of 222, but 31,000 of that's at the Orlando deposit, which we believe is amenable to an open cut cutback of the existing pit, so we can access, some of this residual ore that's remaining there. So that's been our key focus on this area at the moment. Just also on the map there, you can see the Gecko and Goanna areas. They're areas that have got considerable potential as well, both in terms of exploration up at Goanna, and in terms of residual resource at Gecko. Thanks. So this sort of just gives a bit of a schematic. You can see the open pit there on the left of screen, and the schematic about how we can sort of cut back the existing open pit and access some of this material that previously would have been considered as an underground mining opportunity. But obviously copper price is dramatically different than what they are, what they were then, and we think that's opened up the opportunity to look initially at open cut. Ultimately, we would consider also looking at further underground mining in the area. But as I say, for starters, we think that the open cut is the easiest pathway for us. There's been a number of other people sort of rediscovering the Tennant Creek area in recent times, and we've seen groups like Emerson and Tennant Minerals recently, announcing some quite impressive copper hits. So yeah, we think that while it's a mature area, there's certainly a lot of exploration opportunity remaining in the region. Thanks. So since we've got involved, which is only about 4 or 5 months, we've been very active. We're basically going back and reviewing and cataloguing and prioritising the testing of the existing diamond core. We've mapped out a drilling program to supplement the core that's available. We've got the approvals in with the Northern Territory government for that at the moment, and we're also working through the process with the other key stakeholders, obviously the Indigenous groups, the pastoralists, to enable to get ourselves boots on the ground there pretty shortly, which obviously with West Australian borders opening up is also a little bit easier. It's been a little bit challenging over the last 6 months, but looking forward to be able to spending more time on the ground and really getting to push the projects along nice and hard. Thanks. Just briefly before I move on to the iron ore, on the copper, we do still have some residual non-operated JV interests in the Bryah Basin in and around the Sandfire projects. Sandfire operates some of the joint ventures, as do other parties, including Aurus Minerals, who saw announced last week that they're starting some further drilling in and around the Forest project at the moment. So passive positions for us, but we've got good exposure and free carried exposure to some activity in the hands of some good operators down in that neck of the woods. Thanks. So the iron projects, the one that's in production is West Wiluna, and then Yarram up in the Northern Territory is one that we'll potentially get to in the near future. So let me start with West Wiluna. Next one, please. So yeah, basically, as you can see from this, we've got a resource at this project of about 10.7 million tonnes, and it's 63.7% Fe, so extremely high grade ore. And basically what we're trying to do is focus on a value driven mine. We're not really looking for volume. It's quite a long haul from the coast, so we don't want to be taking anything to the coast that's not a high grade. So as I say, our focus is very much on prioritising both grade and also where we can lump material, because there's significant premium that's attached to lump material. Thanks. And as I say, I think it was about August last year that I presented. So at that stage, we were basically just opening up the mine. So we'd started work on the ground in May, following a receipt of our final approvals. August, we'd opened up the mine. September, we were trucking ore into the shed, and by October, we were shipping ore. So pretty remarkable turn times to be able to bring a project into operation within sort of 4 months of starting, and also only spending about $5 million on the project. So I think it demonstrates our execution capability, and the operations of the mine have proceeded pretty smoothly subsequent to that time as well. So I think because we have got a team that's got a lot of operating credentials, it's really started to show the benefits of that as we've been, developing and operating the project. We're trying to do about a ship a month. We ship out of Geraldton Port, so probably about 60,000 tonne vessels. But as I say, focus on high grade material. Thanks. The sales side, the iron ore market's very volatile, in recent years, and even over our 6 months of operation, we've seen that. I think when we were commissioning, the price was nearly $200. It was then down into the 80s in our first quarter of operations, which is a challenging number for us, and it's now back at $160 odd. So basically, the way we've tried to sell, is actively use financial instruments to provide us protection. We had a significant hedge gain in Q4 as a result of that drop in price, and with the price rising up again over the last month or so, we've had a chance to now reset hedge positions into the next 6 months. You can see a summary of them there, but we've sort of got swaps at $150 odd US a tonne, and a series of collars that have a floor price around $120 and participation in uptick up until $162. And those are just hedging the 62 index. So any lump premium or any premium of grade above 62, we benefit from that directly. You can see there, because we have got a higher cost of operations, primarily driven by our trucking, our break-even cost with high lump premiums at the moment is probably around $100. In a world of higher freight or lower lump premiums, it probably pushes up a little higher. But you can see that we've now managed to hedge off a decent percentage of this next 6 months production at prices that are well above our break-even levels, and gives participation, considerably more above that. Thanks. Probably one of the key messages for the presentation is this slide, I think. So you can see there the share price in the black, and the iron ore price in sort of orangey brown. And basically, as we started production in the June-July period, you can see the market responded well to that. And unfortunately, we were hit by this big fall in iron ore price. The share price fell down reasonably sharply on the back of that. What's happened in the subsequent 3 months or so this quarter is that we've seen the price really push back up quite significantly. And as I mentioned, lump premium also has pushed back up significantly over that time. And the share price hasn't really responded. So to me, there's a value gap there that's sort of, I guess because of the volatility, perhaps people are reluctant to recognise that value. But definitely at these prices, the company generates a substantial amount of cash flow, and we'd expect that as we see that coming through the bank, the market will adjust the pricing of the company accordingly. One of the other key things, sorry, just one further thing on that one, sorry, is the amounts that are starred there, which is the realised prices for our cargoes. What you see with a number of the iron ore producers when they're reporting results is they're saying they realised, X percentage of the index, 70%, 80%, 60% in some cases. You can see there for our 3 shipments today, we've been averaging well above 100% of the index. And that reflects the dynamic that I talked about, that we're a high grade producer. We've got lump premium attached to our product. And also we've got good relationships in the market. So I think those factors have enabled us to price significantly above index, which is something that offers us a lot of value and helps to drive our cash flows moving forward. Thanks. So yeah, just briefly to wrap up with Yarram. It's a project that we think's got a lot of potential. It's located, only about 100 kilometres from Darwin Port, where there's quite a bit of spare capacity, and can take bigger vessels than what we're using at Geraldton. So we'd end up with more competitive freight rates. You can see down the bottom there some of the historical drill intercepts from prior owners. We've had 100 odd meters at 65%. We think it's probably not a large project. We've got an exploration target on there of 4 to 6 million tonnes based on that historical drilling. But with the location close to port and with our demonstrated ability to bring mines on very cheaply, certainly if this mine was in production today, it'd be a real gold mine, so to speak. So yeah, our key is to do some further exploration and approvals work to try and bring this into to production as soon as we can. We did drill a few holes before the wet season, just to start to try and confirm some of those historical intercepts, but primarily to step out. You can sort of see the proposed drill program that we've got approval in place for there. It's primarily stepping out down from the past drilling to try and grow that exploration target, and ultimately, obviously, convert that into a resource. So yeah, I was hoping to have those results through by now, but the lab's a little backlogged. So yeah, in the near future, we'll be able to give the update of those few holes that we did get done before the wet, and then we're basically doing some targeting work now using some ground mag, and then we'll get back in on with the drill rigs there again once the wet season finishes in the next month or two. I think the next slide is really just largely recapping around the positioning of the project there and its location. You know, proximity to key Asian markets is one of its attractions. Thanks. So I think just to wrap up, yeah, plenty happening. Tennant Creek will be getting on the ground, basically doing some exploration evaluation type drilling while we continue to progress the approvals and feasibility study work on bringing that back into production. We'll continue to try and maximise the cash flow from our JWD project, which will help us to both fund the existing project suite and also look for other opportunities. And at Yarram, as I mentioned, basically do this targeting work and then get in and do some further exploration and approvals and evaluation with the view to try and get that into production as well. Meanwhile, keeping an eye out for other opportunities that we are seeing people come to us and seeing that we're doing a good job with getting this other mine up and running and looking at how we can get involved in some of their projects. So that's something that we continue to evaluate. So I think that's a bit of an overview of things, and appreciate the chance to update everybody.
Mark, thank you for the great presentation. It's always great to have you on Broker Briefing. We've got a question that's come through just on the thematics. So where do you see the iron ore market going in the future, and will it impact on the projects despite the hedging?
Yeah, look, obviously the iron ore market, as I said, is very volatile. I've been sort of selling iron ore now for 15 odd years, and I'm still surprised fairly regularly with the direction that it goes. I think at the moment there is positive thematic, certainly. I mean, we're seeing a lot of demand from outside of the traditional main markets. So we're selling pretty much into Southeast Asia primarily, rather than say China and Japan and Korea as historical main markets. I think that obviously there's a pricing point that most of the smaller scale projects need to work, but with the demand dynamic that we're seeing, and also with supply constraints, you know, resource supply is consistently under delivering, and there's not many new mines of scale coming into the market. So yeah, we believe there's a very positive dynamic that smaller players can take advantage of if they can move quickly and get into the market. So that's what we're all about.
Well, thank you for that, Mark. I do note there's quite a few questions that have come through, but we have run out of time. So I would encourage shareholders to reach out to Mark directly via the contact details on the bottom of the ASX releases. But thanks again.
No, thank you, Jane. Bye.
So next up, we have a presentation from Austral Resources with the ticker code AR1. To tell us more about their copper cathode production in Queensland, I will now hand you over to the Executive Director, Dan Johnsey. Good afternoon, Jan.
Jane, thanks very much for having us. I'd like to, I think we're quite a unique opportunity in the sense that there are not a lot of producing copper plays, especially in a copper cathode sense. I'm going to walk you through our investment opportunity. I guess from our perspective, you know, you've got a lot of infrastructure that we've currently got. We didn't come to market to raise capital to go and build a facility. We've got one. We didn't come to market to put together a mine. We've got one, and we've currently started mining. And we've got some of the best tenement package, especially in Queensland and potentially Australia, when it comes to rare metals. some of the infrastructure stuff we've got in as far as our processing facility, we've got an SXEW plant that, when it's operational, will be producing with Anthill around about 10,000 tonne per annum. We do have a short video there that we're just trying to get playing for you, but you'll see here in the short video, this is us producing copper as of about 8 weeks ago. And as that video pans out, you'll see the sheer size and enormity of this facility.
I might sorry, Dan, I might just interrupt you there. We seem to be having some issues with your screen share. Maybe perhaps if you stop screen sharing and then we might retry again now.
Okay.
I have seen those videos and they're very impressive. So it'd be great for the audience to see them as well.
I'll keep talking anyway, Jane, while the tech peoples are working on it. So again, the facility itself, in a replacement sense, is around $160 million to replace. The other thing that's quite unique in what we've got in an asset is that to get a producing copper mine up and running, you're looking at around 7 years from permitting to plating, I guess. And a lot of that is due to the delay and the length of time to get a facility such as ours fully operational and built. We've also got a 150-man camp, of which, as of this morning, I saw the report, we've got 101 that's based on our processing people, Thiess Mining, and AR1 people. I'm not sure what slide we're up to there, Jane, but I'll just keep talking. It's a real shame that those videos can't be seen. Until the operation. So we've got 40,000 tonne of contained metal sitting there that we've just started with Thiess. We've got a 4-year mine life. We've recently done an offtake and prepayment with one of the world's biggest miners in the form of Glencore. And I'll touch on why that's. So we did a $21 million prepayment with Glencore, and I'll touch on that a little bit later in the presentation as to why that's so exciting for us. The other thing that we've done is with Glencore is we've got a $70 US premium above our LME pricing for our copper. To put that into dollars and cents, over the next 4 years, we'll do over $500 million worth of revenue, or $140 to $150 million annually. And we are up to nameplate capacity by August of this year at 1,000 tonne. Next slide, thanks. Again, Jane, I'm not quite sure whether you can see these videos, but we've got a short video of us blowing up Anthill as of December. So we listed November 3rd. And I guess we went to the market with the express intention of getting Anthill to production. We awarded the mining contract to Thiess mid-November. As of mid-December, we put our first blast through Anthill. And there's another video playing just now that I can see anyway, of Thiess when they started mining as of the 7th of January. In that short video, you'll see we've got quite a large fleet. They're swinging with Liebherr 9350s and 994s, which are 250 to 300 tonne excavators, and they're matching them with 785, 789 trucks. Our haul for Anthill, so the overburden component, they hit their first ore the end of February, and I don't know. We'll use this as a bit of a show and share. I'm not sure whether you can see it, but here's some high-grade ore over 3% that we hit at the end of February. So we're ahead of schedule in relation to that. Slide, thanks, B. Anthill, the timeline. So we've started mining, as I mentioned. We're in the process of a refurbishment in Mount Kelly plant, which is our crushing and agglomeration circuit. So our processing facility has not stopped. As you can see, the two main line items are the third from the bottom and the bottom line item. We are producing today. We'll be doing 150 tonne of copper cathode for March, and you can very quickly track your eyes to August. We're at 1,000 tonne a month. Overlay that with the bottom line in a gross revenue stream. By August of this year, we're at nearly $15 million in a revenue stream per month, or $500,000 per day. So once we get into full production, we'll be producing a lot of cash very, very quickly. The next slide I want to touch on, and this is more for the operational guys and the geos amongst us. This is the pit shell of Anthill. We've got the east and the west pit. The pretty colours there are telling us the grade of ore it is. Point to note, our feasibility study was done at $8,200 per tonne. With copper where it's at today at $10,200, we've already got optionality around increasing our mine life with cutbacks. So for that, we're very, very excited about what we see. And I'm also going to touch shortly on the areas in and around Anthill that's super exciting. This slide here, so that middle slide there is of some very high grade ore that these hit. I mentioned, the end of February. This is coinciding really well for us as we come into full production and are about to start producing copper as prices hit an all-time high. So earlier this week, copper hit $10,750 US per tonne. Again, keep in mind that our reports or our feasibilities were done at 8,200. And to put that into dollars and cents as well, from an NPV perspective, that had us sitting at around 134 million. On today's numbers, puts us well north of 200 million. This slide here just of some operational stuff up on site. That's our copper in the copper cathode in the bottom left corner, some testing in the top left, and some mining. Some of the mining guys are pretty excited to see that they made it onto a recent presentation. Al1 Exploration. So I've just spoke to you about, the fact that we are operational, we are cash positive, excuse me, and cash positive in a big way come August when we start producing it at 1,000 tonne a month. That also means that once we are producing, that was where we were focusing on our exploration, and the fact that we had quite a large budget to be able to spend it on. I mentioned there that we've done a recent deal with Glencore in a offtake and prepayment. So $21 million in a prepayment sense, that enables us to pull that all the way forward and really focus on our exploration. So we've got a four-pronged attack. Anthill 2.0, which is in and around Anthill, and I've got some slides I'll touch on shortly on that. The oxides within our footprint of our tenement, our 2,000 square kilometres. So we're really focusing in and around that 50-kilometre radius of Mount Kelly. So Mount Kelly is our processing plant. Third pronged is monetising our sulphides. And again, we'll touch on that a little bit later. And fourthly, some JVs or purchase of further tenements in and around us and really ramping up that ability in our processing plant. This slide here is kind of talking about our focus initially on where we're going to be spending our money, and the fact that you can see, I know a lot of people, all their focus is on drill meters, and so by the end of this month, we've got drills currently, and we hope to have start drilling by the end of this month. And again, our first low-hanging fruit for us is in and around Anthill. Touch on Anthill 2.0. The slide you can see there, the pink area is the areas that initially CSA Global worked off in our optimization. You can see the speckling of blue dots. And I guess the things that really excite Steve Tambanis, our CEO, who's a geo or an exploration specialist, the thing that's really exciting Steve and his team, the areas to the north, the northwest, and that west area. You can see very little drilling's been done in and around there. So that's within 5 kilometres of anthill. There's been very little exploration. That for us is super exciting. That for us is our low-hanging fruit. This slide here, and I'm not a geo, so you'll have to excuse my ignorance, but Steve would spend 10 minutes talking about this slide alone. But this is all to do with re-optimizing current geophysics and also structural corridors. Down the bottom, you can see a red section with a yellow star. That's anthill. And you look due north and that northwest corridors, you can see that these structures is exactly what Steve's talking about, and the first place our drill rigs are going. Very excited about this. Phase 2. And this is in our current tenement package. I mentioned that we've got 2,000 square kilometres of tenements. For us, we've got 38 target areas already. So Steve is actually on a call right now with the independents we're using and his team, focusing on these 38 target areas, of which most are within 30 kilometres of our processing facility. Again, for us, our focus is getting Mount Kelly facility fully optimised and really ramping up. So we're really excited about what we're seeing here and there. So extending our mine life part 1 and our low-hanging area is in and around anthill, pushing that mine life from 4 years to 5 years to 8 years, and then finding our next real big ore body so that we can roll on after that. This slide here is our next focus after that, and we're going to be running, and this is what I mentioned there, with the ability that we've brought that prepayment on board, we can be running all these things concurrently. Instead of waiting for cash to come in doing a raid, we're up it. We're focusing on this entirely. So our sulfides, we've got 330,000 tonne there. Keep in mind the previous owner, we've got 5 pits that have been mined previously. Those 5 pits, every time the previous owners hit sulfides, they stop drilling. So that's what we know of. We're absolutely astounded and sure there's a lot more of it than that. The other thing to note with this is that, the overburden and the oxides have already been mined. So in some cases, our sulfides are visible by the eye. That's really exciting. Something else that we're touching on, and we can't mention too much about it, but we've got tests currently happening on ways that we may be able to process those sulfides using our existing infrastructure. Now that is really exciting. Steve has just spent 2 weeks up on site with his team, and he's just been peeling through these areas and all the data that we've currently got. So we're very excited about that. The other fact is, we've been focusing very much on bolting together our new exploration team. Again, that's why Steve has been up on site. So there's a lot of opportunities there with what initially it's in and around anthill, followed by our tenement package within a radius of our processing facility, all in an oxide sense, so we can maintain making pure metal. And then following that is our sulfide opportunity. But we do have an extensive board, team of guys on our board, interestingly enough. So we're all hands-on people. Shane O'Connell, our COO, has currently been on site for the last, focusing on operations with these in our mining campaign. I just touched on Steve's just come back from a 2-week tour of duty up on site, bolting his exploration team together and focusing on where to go from here. Investment opportunities. So I guess the fact that we listed November, we're very focused on getting anthill to production. So we've de-risked, that was 4 months ago now. We're right at the money now on getting ready to start doing, getting ready to do a trial on the crushing circuit and really focusing on getting anthill ore processed and getting to that 1,000 tonne a month. The next part is that infrastructure. We don't need any more infrastructure. We've got some of the best tenement package in a rare metal sense in Queensland, potentially Australia. It's a great area up there. There's a lot of very big names in and around us. And the fact that we are a pure copper play, we're focused on copper. We're really focused on getting, anthill into production and producing at that 1,000 tonne a month, which is going to be happening by August, and then really pushing on that mine life, extending that mine life with our oxides, but our sulfides as well. Jane, look, again, apologies for the few technical errors we had there. I don't know where those videos played, but it's a real shame that the people watching didn't get to see that.
Oh, I know, Dan, that was unfortunate. Look, I think we probably will re-record this exact presentation to send out to all webinar attendees and everyone on our broker briefing database. But I will just ask you a few questions if that's okay.
Good.
Wonderful. So the spot copper price has been performing quite well recently, but this hasn't really been reflected in the movements of the AR1 share price. So what do you think is the reason for the downward trend for the past month?
Great question, Jane. I guess for us, our focus has been completely on deliverables. So we listed early November, and I said the day we listed that our focus was getting Anthill to production. We've put a lot of time and energy in that, and we're right there. Now, I know that some people's strategy might have been, let's go drill some holes, let's focus on that. But we really wanted to ensure that we got Anthill into production, because we know that once our Anthill is in production, we're going to be spinning out a lot of cash. And again, so the other part of that was pulling that prepayment on so that we can focus on the exploration. I would have hated to get to, March and realize that all the cash that we had put away to get Anthill up and running would focus on exploration. So, but to answer your question, in short, I wake up every morning and ask the same question. The two research papers we've had done today have us valued at 3 to 4 times that. So all I can do is keep delivering milestones, Jane.
Absolutely. And I note you do have quite a fair bit of skin in the game yourself as a big shareholder of the company. So it is always good to see. So again, we apologize for the technical difficulties, but we will be re-recording. And if you do have any questions for Dan and the team at Austral, please feel free to reach out via the contact details on the bottom of the ASX releases. But Dan, we'll be in touch.
Thanks, John.
And finally, we are joined by Chris Jemison, the CEO of Jade Gas, with the ticker code JGH, a company focused on gas exploration in Mongolia. Chris, thank you for joining us.
Yeah, thanks for having me, Jane. Good to be here.
I'm actually a shareholder as well, so I'm looking forward to hearing all about the company.
Oh, that's good to hear.
I'll bring up the presentation.
Thank you. So, yeah, thank you. I think firstly, thank you to everyone for listening in today. Really do appreciate it. And the timing couldn't be better. I've just returned from 2 weeks in Mongolia and met with a number of government officials and the regulator over there, as well as going down to our site. I think the key takeaway from the trip was that there is overwhelming support for what we're doing, and we are looking to extract natural gas from coal seams in the South Gobi Desert, about 500-600 kilometres south of Ulaanbaatar, the capital. And Mongolia as a country doesn't have a gas industry at this point in time, and they burn a lot of coal to generate energy and electricity. And if we can actually get to the point of commercialising our coal bed methane play, then it will help create a cleaner energy mix for the country, which is a big positive and something they desperately want, as well as energy independence. So at the moment, Mongolia is heavily reliant on gas and petroleum products from Russia and also China. So the ability to sort of help them become more energy independent would be a massive, massive plus for the country. So maybe if we just move forward to slide 4, if possible. So corporate summary, I'll just touch on this slide. And the team itself, a very small team. There's only 4 of us here in Adelaide, 3 of us ex-Beach Energy. Mark Pitkin's manager of the technical side. He was involved early days in the Spring Gully permit or project, which is actually feeding a lot of Origin's gas into LNG export. So Mark has good technical knowledge on coal bed methane, which is a real positive. The board itself is a strong board. We've got Joe Burke and Dan Eddington, who both have a good history of corporate success. Joe especially is involved with Mongolia, has some strong connections there. Dennis Morton and Peter Lansom. Peter came on recently. Peter was also involved in Spring Gully at Origin early days. And both Dennis and Peter were part of the Eastern Star gas sale to Santos, which was sold for about $1 billion. So having that experience on the board is really positive. Next slide, please. So I guess why Jade? We have 3 very, very good permits. The first is the main one, our flagship one, is Tavern Tolgoi. It has a TCF of prospective resource on it, and it is seen by the government as a strategic asset and one of great importance. And the reason for that is that within the permit itself is Mongolia's largest coal mine. And what we're looking at doing, and I'll talk to this in a minute, is we're looking to extract natural gas off the deeper coal seams that run from Tavern Tolgoi. Now, the permit itself has a TCF of prospective resource on it, and we'll be looking to convert a portion of that to a contingent resource around mid-year. So it's a large amount of gas, and the work that we've done to date is proving that the gas is certainly there. We have a 6-well drilling program at the moment. We are drilling wells, the 2nd and 3rd wells of that program. We've actually reached TD on one of those wells, which is Red Lake 1. Red Lake 2 and Red Lake 4 are both close to TD, and we'll be getting something out to the market soon on those 2 wells. We have also added to our portfolio. So we've got the Tavern Tolgoi coal bed methane project is the flagship one, but we picked up 2 large permits which have a great address, the Shivi Gobi permit and the Eastern Gobi permit. I'll talk to them a little bit more in a minute, but they're nice additions. And we are looking, if we're going to create an industry here, then we also need more assets to sort of work on, and those 2 new permits certainly provide that. The market itself for gas and energy, I mean, it's incredibly strong at the moment. Pricing strong, demand's high. We've got global issues around Russia and the Ukraine, and all of that is driving a focus towards the requirement of certainly gas to sort of help transition towards a renewable future. And so it's a good space to be in at the moment. As I mentioned before, we've got a good team in place, but we've also got a strong team in Mongolia as well, of well-connected people and well-qualified people. Which is great. And as I mentioned earlier, recently had a lot of meetings with government officials in Mongolia, and they were very positive in terms of what we're doing, and certainly supportive of that. And the people that we have within Mongolia have built very strong bonds with the government. Next slide, please. So this is just a map, and it shows where our permits are. So the Tavern Tolgoi coal bed methane project is about 650 kilometres south of Ulaanbaatar. The area of the project is 665 square kilometres. We share this with the government. There's a company called Erdnase Methane that has 40%. We have 60%, and the government will only take a portion of a permit if they see it as an asset of national significance. So it does show how important this project is to the government and the country. The Shivi Gobi permit and the Eastern Gobi permit, both large in terms of scale, but as I said, they both sit within existing coal basins. We'll be looking to put prospective resources on both of those blocks over the coming 6 weeks to 2 months. So some news coming on those 2 permits, but we're quite excited by that. They're both very low expenditure. First year is only $15,000 US on each permit, and there's a 3-year prospecting agreement that sits over those. So it's a light touch in terms of spend, but if we like what we see, we might expedite some drilling in those 2 permits as well. Next slide, please. So this is a good diagram, just a little cross section of what we have down in the South Gobi at Tavan Tolgoi, you'll see that each of those light grey lines represent coal seams. The shallower seams are dry, and they're also, they don't have any methane in them. So we're chasing methane in the deeper coal seams, which you can see are the darker coloured ones. There's 3 seams of interest. There's seam 4, 3 and 0 are their names. They are water saturated, and when they're water saturated, it means that the gas is trapped on the coal. So we have drilled Red Lake 1, which is the well off to the right there, which was one of the deeper coal bed methane wells drilled in Mongolia to date, over 1,000 metres. And we extensively cored it. When we extracted the core, we saw we had about 145 metres of total coal, but the coals that we were interested in those darker colours, we had 58 metres and they were gas bearing. So when the coal actually came out, you could hold that core itself, look at it, and you could see the gas bubbling off it. So we know that we have gas that is trapped on the coal, which is really important. We've done some work on the composition of that gas, and we'll be getting something out to the market soon on that. And we also have information on the content of gas within those coals. And again, we'll get something out to the market soon. So the 2 key criteria that we're still to satisfy is permeability of the coals. So the ability of the gas to actually flow through the coal and up the wellbore. And so to that end, we've introduced new technology into Mongolia. One of the tools that we've brought in is called a drill stem testing tool. And that tool goes down the wellbore after the well is drilled and takes samples of the water and gas within the coal and allows us to understand or better understand the permeability potential of the coal. So we're running a DST in Red Lake 2 at the moment, and we'll hopefully have information around the results from those drill stem tests over the coming weeks. So we're gathering a lot of information. We know there's a lot of gas there. Mongolia doesn't have a gas industry, so everything's lining up very well at the moment. So it's a pretty exciting time. So maybe next slide would be great. So this is just our path to production. How do we get there? So at the moment, we are in the drilling phase, the data analysis phase, having a look at the quality of the coals and their ability to produce. The second half of this year, we'll be doing an extended production test on Red Lake 5, which is a well yet to be drilled, but will be drilled over the coming month. And that will flow, we'll put a pump in that and it'll flow water predominantly and possibly a little bit of gas over 3 months to 6 months. And we'll put as I said earlier, a contingent resource certification on the area that we're currently drilling. We then move into a pilot production phase next year is the plan. And after that, we'll be able to book a reserve for the area that we're producing from with that pilot production. And then we move into a definitive feasibility study phase and front-end engineering design, where we'll actually look to grow the area that we're looking to produce from, and then go to FID, where we'll line up gas contracts ideally and start commercial production, and that is expected around 2025. So just in terms of gas contracts and the market itself, as I said, there's no natural gas production in Mongolia. One of our largest shareholders is the largest gas distributor in Mongolia. They import LNG from Russia. So they have taken a large stake in us. And one of the reasons is they see the quality of our assets, but they also have the ability to take that gas as a potential option for us should we get to commercial production. So everything's lined up very well. The assets look great. We've got wonderful support from the government and quite a bit of news flow to come over the next sort of coming weeks and months. So with that, I'll hand back to you, Jane, and see if there are any questions.
Thank you for that, Chris. It's a great presentation. We've had quite a few questions come through, so I will jump into them. And you have answered a few of them, but just in case anyone missed out.
Okay.
So are you looking to expand on the tenement package?
So I think with the additions of the Chivy Gobi and the Eastern Gobi permits, I mean, they're approximately 18,000 square kilometres. So there's a lot of work to be done on those two. So at the moment, from a gas perspective, I think we certainly have enough to keep us occupied. And we also, the Tavan Tolgoi permit itself, there's still further work, and we'll look to put some exploration wells further out over the coming year for the year 2 program. So I think we're comfortable with where we are, and we'll certainly do further desktop work and potential drilling on those 2 new permits soon.
Thank you. And a question's just popped up on Zoom. So how will you get the gas to market?
Well, as I said, we've got our largest shareholder is UB Methane. They dropped the H. So, and we met with them while I was up in Mongolia recently, and they have the ability and the network. So they import LNG by train from Russia at the moment. And what they do is they regas it, and actually a lot of it goes into the new buses that are coming in Ulaanbaatar. So they fill those buses with compressed natural gas, and they run off that. So they're looking to expand so for example, right next to where our permit is, we've got the Tavan Tolgoi coal mine, and there's a lot of generators and trucks that run off diesel. So the idea from UB Methane's perspective is to convert those over to LNG trucks and actually have gas-fired generators there. So that potentially is a huge market. And there's also Oyu Tolgoi, which is Rio Tinto's mine. It's about 80 kilometres away. So UB Methane will take any gas that we can produce, and we'd certainly, if we did an agreement with them, it would certainly be at arm's length commercial terms. I think as a first port of call, they're a pretty solid one.
Thank you. And you mentioned you've got 2 holes pending. So when can the market expect those to be announced?
Yeah, so I think early next week, we should be able to get some information out about gas composition and gas content. And then in terms of saturation of the coals and permeability, sort of 2 to 3 weeks, I think. So certainly there'll be a bit of news flow next week.
And so what are the coal seams like in Mongolia versus Queensland?
Yeah, well, it's interesting. I mean, all coals are different. And what we're seeing is the coals are much thicker. So in Queensland, coals will be around about 5 metres thick, would be a good coal seam, which you could drill horizontally into. Our coals, so we've got about 58 metres. So we've got a lot more coal. What we need to understand is how aerially extensive that coal is. So in Queensland, it covers a really large area. And for us, our permit's 665 square kilometres. So we will be exploring and seeing whether that coal extends out over the whole permit. So in terms of the coals themselves, they're thicker. In terms of permeability, we're still yet to understand that. Gas content-wise and composition-wise, you'll find out next week.
Perfect. And just finally, so what are you most excited about for Jade?
Well, I think it's the opportunity to build the gas industry in Mongolia. And Mongolia is at the mercy of Russia and China. It's a country which is landlocked right between the two. It has about 3.5 million people in it. It's the 8th largest country by landmass, and half of that population is in the capital, Ulaanbaatar. And so there's a lot of, there's 3 Soviet-era power stations that run off brown coal. So the city itself during winter is the most polluted city in the world. So if we can build a gas industry and help the country itself move away from sort of the dirtier brown coals into sort of the cleaner natural gas, I think that would be something that, personally I'd love to see happen, because you're sort of affecting the lives of people in another country, which is a positive thing. So I'm really excited about that. I'm excited by the fact that, the cost to drill wells is less and the gas price is much higher over there. So I think there's a lot more potential margin to be made as well with the programs that we have. And also, just helping to educate a lot of the locals over there. So what we're doing is we're on a path to making sure that they're being educated in how coal bed methane works. And, so helping, if we're going to build an industry, we need to do it with more than just Australian capability. And we're looking to build that Mongolian capability as well.
Well, Chris, that was a great presentation. And thank you for joining us on Broker Briefing.
Thanks, Jane. Appreciate it.
And thank you all for joining us today. So recordings of all today's presentations will be available online in the coming days on brokerbriefing.com. And we look forward to hosting you next time.